And for more on this, we're joined by Xing Gan in Kuala Lumpur. She's a financial market strategist at Exness. Good to see you, Lee. Now, strong earnings from tech giants, despite the ongoing energy crisis, is pushing Wall Street averages to new records. Are investors simply looking through the macro risks, or does this signal that big tech is still largely insulated from energy-driven shocks?
Right, thank you for having me. It's great to be back. Right, I think right now, what markets are doing, it's that they are pretty much looking through the geopolitical noise, but not so much of ignoring it. I think especially around the stop peace negotiations and also the supply disruptions around the Strait of Hormuz, right? It's causing a lot of volatility in markets, right? But we're also seeing resilience in terms of the tech sector, right? Especially with Nasdaq surging to record highs. And this shows us that, on one hand, right, we have this divergence, for example, like hard assets, like oil prices reacting to these geopolitical developments. But on the other hand, also resilience, right, driven by optimism around this tech sector, as well as resilient tech earnings.
And looking more closely at those tech earnings, Alphabet logged its best month since 2004, the year it went public. What's driven its outperformance?
Right, I would say that the move in Alphabet, right, it's supported by optimism around AI, right, but more importantly, it's also about conviction, right? The fact that markets are becoming more confident that AI, it's not just driving usage, but Alphabet's ability to translate this into revenue, and also especially through the cloud as well as the enterprise arm, right? I think it's also disproving this biggest concern, right, that AI would, or rather disproving the biggest concern that like it's gonna disrupt their AI, their core search business. And I think in an environment where we are seeing geopolitical risks rising, right, investors are gravitating towards companies that can actually have visible, scalable earnings, right, and Alphabet fits into that profile.
Meanwhile, Australia has snapped an 8-day losing streak. Do you think this is a genuine rebound or just a relief rally driven by commodity price moves?
I would say that it's more of a relief rally, right, rather than a turning point. I think a big part of it is that the earlier decline actually reflected concerns around inflation and also interest rates, especially given the RBA's hawkish stance, right, and also pressure from this energy-driven costs, right. I would say that if the disruption around the Strait of Hormuz persists, right, that directly feeds into inflation or energy costs, right, and Australia would be sensitive to that, right, through either inflation expectations and even expectations for higher interest rates. So I would say that even though we are seeing a relief rally, but structurally, the headwinds still persist.
All right, we'll leave it there for now. Xing Gan in Kuala Lumpur, thank you very much as always.